What happened on the session today?
Oh, it was a horrible session, James. I mean, we did see the SPI futures actually pointing up in the morning, and that was really on the back of high commodity prices overnight. Iron ore looking pretty good with a rise of 1.1%, but during the session we did see the market deteriorating, and towards the end, if we have a look at the intraday graph, you can see the losses really accelerated. Technically, we were watching the 100-day moving average, where I've just drawn that line, 5,227 points. You can see we bounced off it once, but when we broke through it, the selling really accelerated into the close. Now, coupled together with the heavy selling that we've seen, it does suggest we did see international selling coming through. The selling was most prominent within the top 20. We saw the top 20 stocks actually faring much worse than the small ordinaries today. Every single sector trading lower, with just one exception of the information technology sector, and of course the banks got absolutely smashed. The banking sector down by 2.1%. Westpac was actually down by 2.7%, but we saw more than 1% losses for the likes of the consumer staples, consumer discretionary, the industrial, the energy, the healthcare, the telecom, and the property space. So really bloodletting on the Australian share market today. If we have a look at the market map, this will show us in red all the stocks that were losing ground in the All Ordinaries Index, and you can see it's pretty much been red across the board, so not looking too good for the Aussie market.
Julia Lee, one that we've been talking about all day after that the announcement, the update from Qantas hit the market. In the end, Julia, their shares closing down over 11%. What have you made, firstly, just on the market reaction?
Well, the market obviously doesn't like a profit downgrade, and that's essentially what we've seen here. Qantas saying that for the half year they're going to see a pre-tax loss of between $250 to $300 million there. So we have seen a profit downgrade coming through for Qantas, and the shares absolutely smashed today. If we have a look at some of the problems that Qantas has been facing, you know, traditionally we have seen that strong domestic market offsetting the weak international market, which has usually seen a loss. But in the domestic market, what we have seen is Virgin really increasing its market share, and in particular in the space of business travel or the corporate area. What we saw was Virgin actually leaving the New Zealand market back in 2010. So the New Zealand domestic market, it exited in 2010, and instead it set its sights on Australia and the Australian domestic market. And back in 2010 was really when it first launched its business class. Before then, they didn't even have a business class, and they've been making up market share there. Add into the mix that the highest expense in terms of the operational expense is fuel costs, and we've seen very high fuel costs, not helped along by that falling Aussie dollar and rising refining margins. And Qantas, it does look like in the month of November, has seen a sharp deterioration. So Qantas shares down more than 10% today, down 16% at one point during the session, and reaching a low of 99.5 cents during the session.
What are the key problems? What are the big issues, if you like, facing Qantas?
Well, you know, this is a very difficult space to be in. We only have to look at some of those airlines that are no longer with us: Ansett, Compass, Impulse Airlines. And really, competition in this area has intensified both on the international front as well as on the domestic front. We have a look at something like Air New Zealand. Air New Zealand in the last financial year actually saw a record operating profit, so almost the opposite situation that Qantas finds itself in. And if we have a look at Air New Zealand, the stock price doing well in 2013, it's up by 44% compared to Qantas, which is down by 28%, and even Virgin, which has lost 7% in 2013. Now, if we have a look at Air New Zealand, it has very strong domestic market share, 85% in terms of the New Zealand market, and in terms of the Trans-Pacific market, 40%. It does have government ownership of about 53%, but recently we have seen the New Zealand government paying down its stake, and New Zealand ownership of 88%, so extremely high. But I think what's been moving in Air New Zealand's favour is that it's seen competition disappearing. So we saw Virgin exiting the New Zealand market in 2010, and that's been fantastic news for Air New Zealand and really bad news for Qantas, because once Virgin exited the New Zealand market, it firmly set its sights on the domestic Australian market.
Is it an easy fix? I mean, Julia, it's hard to decipher between some of the rhetoric, you know, from Qantas, from Virgin, from the government. For people out there, investors trying to figure out whether or not this is a place that they need to be. Your thoughts on the outlook and whether or not what we're seeing, a $250 to $300 million loss in the first half, is some pain for long-term gain. I mean, what do you see as a future as an investment for Qantas?
I think for investors and traders, if they're looking at getting into Qantas at the moment, they'd be getting in because they do expect some good news to flow through. They do expect upside, despite the problems that Qantas is having at the moment. And that upside may come from government support. It may come in because we do see a renewal of its strategy, or perhaps we do see a change in terms of the management and the strategy of Qantas. I guess near term, one of the key things that we will be watching is a credit rating to see whether Qantas can retain its investment grade rating. So the credit ratings in the past have said that Qantas does need to keep $2 billion on its books, and at last count it had $2.3 billion, which will deteriorate very quickly if its business is in trouble as well. So we're watching the credit ratings and we're watching the asset sales, potentially frequent flyer, Jetstar. These are the two jewels in the crown's job losses, and then really a turnaround strategy here for Qantas and dealing with that extra competition it is seeing on both the international as well as the domestic fronts.
Much of the focus has been very much on Qantas, but it is the other player in this, well, soap opera.
You would have to say that Virgin shareholders would be worried right now because there's an increase in Virgin regulatory risk. If we do see government support for Qantas, you know, the government is supporting a key competitor of Virgin. Now, Virgin's been operating in Australia for 10 years now. It's done a very difficult job of building an airline from scratch. It is a key competitor in the Australian share market, and of course, if Qantas does get significant support and we do see a significant turnaround, the flip side is that conditions are going to be more difficult for Virgin. So Virgin shares down by 7% in the year to date compared to Qantas, which has lost 28%. But I guess in terms of the airline space, the area that I'd be going to is the airports, something like Sydney airports, because the increase in capacity has been great news for an asset like that.
There were more things happening today other than the airlines. I know it's hard to believe. But Vita, Julia, launched another IPO. Quite a debut on market.
It was a great debut. The stock was up by 40% by the end of the session. So the IPO price was $1.25, and we did see the stock finishing at $1.75 today. Now remember, this is a company that was actually taken private back in 2007 for about $841 million. The debut on the market means that it has a market capitalization of more than $1 billion. And I think one of the differences with this particular IPO compared to other IPOs which have been floated onto the market by private equity companies is that Pacific Equity Partners is retaining a 63.5% stake. It means it's got a lot of skin in the game, and if we have a look at the demand for Vita, it was quite big as well. If we have a look at what Vita does, it's mainly does credit information, so it sells that to third parties such as things like the banks. Around about 85% of its revenues is related to those credit ratings. So very much a defensive type of business, and having a fantastic debut on the market. We'll have to see how the next big one fares, and that's Nine, which should be debuting on the market tomorrow.